Hey, what's going on, guys? This is Max with Because Bitcoin, and today we're going to be doing a bit of our own dubious speculation, inspired, of course, by the great Ben Cowan and some of his dubious speculation videos. Specifically, today we're going to be talking about high time frame moving averages and how sometimes, not always, but sometimes they can be used as pretty good bottom and top signals for Bitcoin. So let's dive into the charts. So as you can see here, I've got the 2-week chart pulled up for Bitcoin. This is basically all of Bitcoin's history. I mean, it goes back all the way until it was basically $0. So we're not going to include a lot of that. As far as I'm concerned, look, Bitcoin existed, but you can't really chart the price action back then because it was just so explosive and volatile. So we're going to really just kind of focused on what I would consider to be the first 3 cycles. So like this top, and these 2 tops up here. And we're going to throw on some moving averages. So it first really sparked my attention when I came across something called the pi cycle top indicator last cycle. Now, I believe it was retrofit. So basically the cycles happened and then it was fit. But it actually did call last cycle's top pretty good. So let's take a look at that. And again, this is not what we're here to talk about, but this is really to just show you and paint a picture to help illustrate that, look, these moving averages, really they're momentum indicators at the end of the day, but sometimes on the high time frames, crosses or even divergences between 2 of them can help you navigate markets a little bit more precise than you would initially anticipate. So look, the pi cycle top indicator is a 350 day and then the other one's 111 day. And basically when they cross, typically that's been within, a few days of, actually when the Bitcoin top has been in. So taking a look at the lower time frame. And again, we won't spend too much time on this, but again, it's really just to illustrate that it does, to a degree, work. And I have maybe found some of my own. So right here, you can see these 2 moving averages cross. The global top happened not so far after. Again, right here, called this one almost perfectly. Moving forward a bit, you can see that it called the 2017 top as well. We'll just quickly map these out because we've come this far. And then again, last cycle, to my surprise, it was within a few days of the Pico top, and I was watching it, but truthfully, I didn't really believe it. I was leaning bearish for other reasons, but I thought there's no way it's going to work again. And, lo and behold, it did. So, I guess here we are. Pi cycle is definitely something to keep an eye on as we get into next cycle because it's worked pretty damn well for the other ones. There's also, this was just recently fit. Somebody made a pi cycle bottom indicator. So this was fit, in hindsight as well. So, when these 2 moving averages cross, and again, these are free indicators. You can go on your trading view to indicators and just type in pi cycle and they'll both pop up. 471 day by 150 day. They might be sped up, I'm not sure, but basically they crossed here. It was the bottom. Crossed here. It was the bottom. Crossed here. It wasn't quite the bottom, but it was pretty close. So anyways, let's get into why we're here. Our own dubious speculation. We're not here to convey somebody else's dubious speculation or somebody else's indicator. I want to talk about some of my findings. And again, I want to just highlight this before we really get into it. We are speculating. We are having fun. We're looking left on the chart. Nothing is chiseled into concrete. Moving averages can cross and it can mean nothing or it can mean everything. All right. So take it with a grain of salt. But sometimes I will say it's a bit spooky how things tend to line up. Moving averages will cross and it happens to be the exact same distance between a previous cross. And sometimes there's a little bit of confluence there. So enough waiting. Let's get into it. Let's start with this. So this is an interesting observation that I made last cycle, or I guess I started watching it last cycle, and I was inspired by Ben Cowan's videos on his dubious speculation, then also coming across, pi cycle top indicators and bottom indicators, and how Bitcoin has been respecting certain moving averages throughout its life. So right now we just threw on the 20-week, the 50-week, and the 100-week simple moving averages. All right. Now, the top one, the blue one is the 20, the green one is the 50, and the red one is the 100. Now, first thing I notice is this is kind of my own version of the pi cycle bottom. All right, so we're going to mark out when the 20-week crosses the 50-week. Okay, we're going to put that in, let's just pick orange. All right, so when the 20-week crosses the 50-week, it's orange. All right, we're going to go through and we're going to mark them out here for what I would consider to be the 3 real cycles of Bitcoin when price was not under $10. All right, oops. Now let's go over here and we'll mark out this one. So to me, this is kind of your warning, okay? When the 20-week crosses the 50-week, this is like, oh crap, things are probably looking pretty bearish here. Okay, momentum is seriously falling off of a cliff. Now the question is, where do you buy? All right, so let's go back to this cycle. In this cycle, or in the first bear market cycle, let's mark out when the 50 crossed the 100, which was right here. We're going to mark that in black. And then we're also going to mark out when the 20-week crossed the 100-week. And as you can see, our bottom occurred in between when the 20-week SMA and the 50-week both crossed over the 100. Basically, right in this window, this was your buy zone. All right, now let's go do the same here. See what this looks like. We get a cross there for the 20-week crossing the 100. And then again here, the 50-week crossing the 100. And it was a little bit more towards, like, if we went to the daily time frame, and here I can lock these in place here. Oops, time frame. Put this on weekly. Time frame, we're going to put this on weekly just so we can get a more granular approach, because it's important to be precise. You know, again, we're having some fun here, but there is something to it. I will say that. So let's move back here. So again, we're just on the daily time frame, but these moving averages are still pinned to the weekly. So when we got the cross here, when the 20-week crossed the 100-week after the 2017 cycle, it was like the pico bottom, like to the day. But again, if you had bought between this window of when the 20-week and the 50-week both crossed the 100-week, you would have been pretty happy looking back. Now let's go to our current cycle. We had our warning shot right here. And then when the 20-week crossed, price was capitulating. And then when the 50-week crossed, we were sort of accumulating. Now, granted, price did end up going, $1,500 or $1,000 below, this point right here. But if you had bought in here, it still would have been a pretty damn good buy. So really, what this is telling me, what these crosses are telling me, is that when momentum gets to a point where it's a bit of a desert out there, and there's simply such a heavy imbalance between the ask side of the books and the bid side of the books, and momentum is so downturned. You want to buy the window where momentum is capitulating. Okay, not necessarily the capitulation itself. You could, of course, but that's a different game. But you want to buy the momentum capitulation, and when these high time frame moving averages cross, can typically be a good indicator. So let's remove these now, and I'm going to show you what I'm anticipating is a possibility for next cycle. So I started with this one because it only makes sense to discuss what a potential bottom could look like, given that we're still sort of in that bottoming phase, in my opinion. Let's turn off the 100-week moving average. So right now we just have the 20-week simple moving average and the 50-week simple moving average. All right. Now we're going to mark out, again, where those two crossed. So right here, we had a cross. Let's actually go down to the daily time frame. We'll be as precise as we possibly can. After the 2013 global high, we had the 20-week and the 50-week cross right about here. All right. Now let's move forward. We'll mark out the 20-week. The 20-week and the 50-week crossing here after the 2017 cycle. Now, we're going to take some fractals here. Actually, first, let's take some measured moves, all right? So let's go to the weekly just so it's easier to see. So from the time, we're going to make the, actually, we'll take this off for now. We'll add it after. So the time from when the 20-week simple moving average and the 50-week simple moving average crossed until the all-time high, it was 1,218 days. Okay, now again, we're on the weekly time frame, so let's actually take a more precise number because I want to see exactly what it is. All right, so from the day these two crossed, right here, full cross, till the absolute pico top of the Bitcoin move in 2017, it was exactly 1,213 days. Now, let's go forward to the next one. So when we had the 20-week and the 50-week cross, let's see how long it was until the all-time high. So here was the cross. The all-time high. Let's make sure this is perfect right here. Not quite. That's the cross right there. And then the all-time high, that looks pretty good. So this one was 1,221 days. So slightly longer, about 1 week longer, okay, from the time that 20-week crossed the 50-week moving average to the next all-time high. So I will say this, it's pretty spooky how close these two tops are together. I mean, they're about a week apart. You know, they're 1 week in terms of length from when the cross happened till the next all-time high, 1,200 and change days. Weird, right? So let's have some more fun here. Again, we're going to dubiously speculate here. So let's draw some fractals and speculate on what the next cycle could potentially look like. So from the first cross right here that we measured to the all-time high, we're going to mark this in we'll mark this in red, right, just to keep it organized. Here's this one, and then we're going to copy this, and we're going to paste it right over here from this cross. All right. Now, next one, and again, I do not expect this to happen. Okay, I am a major advocate of lengthening cycles with diminishing returns. I am not here suggesting, even for a moment, that somehow Bitcoin's going to do this, okay? We're not going to go to 1.6 million, okay? It's simply not going to happen. But I want to highlight the times, all right? The potential times it can take to get there. So here's fractals, basically from the two crosses. So again, the 20-week crossing the 50-week, the 20-week crossing the 50-week. And you can see again, like, if the same length, the same amount of time happens from our current cross of the 20-week and the 50-week moving average, and it's about 1,200 days, where would that potentially take us out to? Let's mark it out. So potentially, you're looking at sometime August, looks like, summer of 2025. So from right here, from where we're at currently, it's about another 700 and some days, 700 to 800 days potentially. So again, I am not expecting at all that we're going to go like up here or even up here. I think that the next cycle, again, will probably be more something like, maybe we come up here and we go to like, 150,000 or something like that. But it's interesting. I'm less focused on the fractals and more focused on the time. Again, the time from these crosses. So from right here to wherever the all-time high is, could it be another 1,200 and ish days, right? 1,200 days, we'll just round it to. And it's interesting. I think I have the halving cycles saved on here as well. I got to get this a little bit organized. But it's interesting to see where the halvings take place as it pertains to these crosses, right? So we had our cross right here. And then the halving happened. And actually, I'll just remove these. We already know it's about, 1,200 days or give or take. So let's move this. So the halving occurs just after the cross, right? So we get the cross, the halving occurs. We get the cross, the halving occurs. We get the cross, well, potentially the halving's going to occur, right? Let's move this over here so we can see. And it's interesting how after the cross, the halving is coming a little bit further each time after the cross. So for this one, it's 300 and some days. from the time we had the 20-week and 50-week cross here, 670 days. And then from the cross here until our next halving, which again hasn't happened yet, it's going to be presumably April, so early Q2 of next year, it would be even longer. So it's interesting, there's a lot of similarities to these cycles, and, a lot of people speculate, well, it's a program, Bitcoin, it's programmed to go up with time. The block rewards get cut in half for miners to be, the same level of profitable that they were the previous cycle. Bitcoin has to double, and there's all these different explanations as to why, why price does what it does, and, people put on their tinfoil hats, myself included, but really, I'm more focused on just simply put the momentum here, right? Like, where did momentum capitulate, and where could we expect momentum to potentially sort of expand to the opposite side? And just, the reflexivity of the market, right? So something interesting I think about all the time is, what if this move right here didn't happen on Bitcoin? This was a full-blown capitulation. I would have expected, if we didn't get a capitulation, I would have maybe expected price to just do something like this and just follow this red line, right? Like, you wouldn't have had this move, this major oversold move, and then in turn you wouldn't have had to have this major overcorrection, this reflexive move to correct. You would have maybe just seen like this big, beautiful arc up like this, right? So, sorry, I'm scribbling here, but point being is, if we have these major momentum capitulations, then typically it's followed, and it doesn't have to be immediately, by, major expansionary period where you see these moving averages spread apart like this. So it's something I'm keeping an eye on for sure. But anyways, that's really all I've got for you guys today. We had a little bit of fun, dubiously speculating. Again, this is because Bitcoin, we're a financial media company with a very heavy emphasis on digital assets. We've got a bunch of premium services down below in the description, premium research reports, a premium Discord. We're all very active day trading as well. We share all of our active positions and premium analysis. And we host 2 private live voice calls per day with our entire community. So anyways, if history is any indication, then, potentially we'll be looking out, sometime in August, for the next Bitcoin high, maybe, let's see, somewhere out in here, 1,200 days from this cross. So, guys, that's all I've got for you today. Thanks so much for tuning in. If you are new here, please like and subscribe if you enjoyed the video and had a little bit of fun today. But keep an eye on it. You never know. Keep an eye out for summer of 2025, roughly 1,200 days from when the 20-week and the 50-week simple moving average cross last bear market. So, guys, thanks again. Take care, and we'll see you next time.